también esta mañana a Massimiliano Bondurri, founder and CEO at SGMC Capital. Good morning, Massimiliano.
Good morning.
What's your point of view about markets, about the stocks in this morning?
Well, we're still digesting the very high inflation print that came out of the US, and that's going to take a little bit of time in order for global markets to settle on. Clearly, the print is extremely high. Now, global investors need to realize whether that's going to be the peak of inflation or whether inflation is going to be even stickier going forward. And therefore, that's why you're getting quite a lot of volatility in the markets, with Nasdaq opening very low and then managing to close roughly flat. In Europe, the risk of environment continues, mostly due to some geopolitical tensions. Clearly, what is happening with Italy doesn't help the environment. At the same time, the energy crisis, which is looming in Europe, continues to keep the risk of sentiment very high. Therefore, it's going to be a few trouble sessions ahead, especially for Europe, and we advise global investors to remain cautious, especially on European markets.
Central banks, European Central Bank first, at the 21 of July, is checking the temperature of the economy. 21 of July, European Central Bank has the most important decision of the last decade. What do you think about the strong power that the European Central Bank could hit to the economy?
Well, European Central Bank and global central banks in general, but especially European Central Bank, need to start and keep going with this normalization progress. And we have seen it, for example, in Canada. Canada raised by 1 full percentage point. The Fed is likely to do that as well at its upcoming meeting. And European Central Bank needs to start this process. You cannot keep interest rates negative any longer with this inflation, with everything that is happening, with potential recession risks ahead. Therefore, it needs to start moving relatively quickly in order to at least get out of the way the negative interest rates, and then from there see exactly how the inflation and especially how the growth numbers keep going from there. But the messaging and the narrative that the European Central Bank needs to give is the one that it is decided to fight inflation, it's firm in it, and it has to start acting upon it.
If stocks have a bad understanding about the decision of the European Central Bank, could have a new hits about the euro against the dollar?
Yeah, so in terms of the euro, the energy crisis and the geopolitical tensions are definitely weighing. Whenever there's big risk, the dollar, of course, is the main winner, and we have seen it. I mean, the move down to parity has been very quick and very strong. In terms of the equity markets, clearly investors know that the European Central Bank needs to do something, needs to raise rates. And all central banks are just very late at doing that because they need to do that in the face of a slowing economy and potential recession risk. But it's better to get that out of the way earlier and let stocks discount that a bit earlier rather than keep waiting and leave that lingering on, which then is going to create even more uncertainty for investors.
Thank you very much, Massimiliano Bondurri, founder and CEO at SGMC Capital. Good day, good business.
Thanks, same to you.